What's going on, everybody? Happy whatever day of the week it is. For me, it's Thursday. Whenever you're seeing this video, I trust you're having a fantastic day. Excited to make this video and kind of walk you through a brand new inverse fair value gap indicator that I put together and that I'm actively looking to have beta testers use, give feedback, and share their overall experience with. So a couple of things I'll be overviewing in this video is number one, how to actually access this indicator because it is an invite only script on TradingView. It's a very simple process though to get access. Number two, I'm going to be sharing exactly how I personally use it. I'm going to give you a quick rundown of what to more or less look to, do before just taking any trade that's being identified with this indicator because it will give you entry and exit parameters. And number three, I'm going to leave you guys with a form to which you can then provide your feedback. And we're going to take these forms and the submissions into consideration to make the indicator even better as we come out with the V2, V3, and so on and so forth, better versions in the future. So without further ado, let's go ahead and dive right in. So first things first, this is what the actual indicator looks like on TradingView. If you go down into the video description, you'll be able to favorite this. Okay, you can add this to your favorites on TradingView. That way, when we do add you to the indicator for access, you'll be able to use it and add it to your chart very simply, very easily. So you can use the description video of this, the description of this video for the link and all the information on how to get access, so on and so forth. But from the indicator, it very simply is doing exactly this, okay? This indicator is identifying fair value gaps, providing entry and exit parameters upon inversions. So when price, creates an imbalance or a fair value gap in the market, as soon as price, disrespects that, creates an inversion, that's when it's going to give you, entry, exit, stop loss, take profit parameters accordingly. This is currently accessible in beta version, and it's already pretty good, just even in the beta version, to be honest. It works really well. But to anybody that's a member of Primeverse, so it's very simple. If you go to this website, which is also linked to the indicator and in the video description, it'll walk you through the motions of getting started. And it's just basically to anybody that's a part of our free community. The community is completely free. If you want an overview of the free community, what all is included in that, you can check out a video in the top right of this one. But that is, basically how to get access to the indicator. Very, very simple, very straightforward. So now that I've covered how to actually get access to the indicator, I want to walk you through how I personally use this and why it's been such a time saver for me when it comes to trading in the New York session. So first thing that I like to do, right? Number one, when you have the actual indicator on your chart, this is what it looks like. Okay, from the hourly time frame perspective, this is what it's going to be looking like in the replay mode for gold. And you'll notice that there's different entry, SL, and TP parameters given in accordance to what's currently on screen. It's always going to show you the most recent inversion that's taken place in the market, whatever time frame you're looking at, and the previous one, the second to most previous one, right? Aside from the current one, right? The other one that is most recent on screen. So if I drop to like the 15-minute time frame, you'll notice that there was a previous one here that parameters aren't fully visible for, but the current one is. There was an inversion that took place here. You have SLTP parameters accordingly. And you could just use this very simply, very basically, just anytime there's an inversion, take a trade using the risk to reward parameters. If I double click into it, all right, the way that it's working is it's always going to place SL beneath a previous swing low. It's going to look back however many candles you have this preset to. So for this, by default, it's going to be 10. So it's going to look back no more than 10 candles to identify where the SL placement should be. And then the TP1 and TP2 are going to be risk to reward based. All right, which is nice. It's convenient. You got a 1-to-1 or a 1-to-2 by default. And of course, you can adjust this to how you want. Right? If you want bigger risk to rewards, by all means, have at it, go crazy. Now, I personally don't just take trades anytime this setup is shown and identified because it's going to show literally every single inversion that takes place. So if I go to the 1-minute time frame, we have inversions that take place all the time, okay? But you want to identify the high quality inversions to justify you taking the trade instead of taking just every single one that you see. Although you might be profitable taking every single one that you see, for me personally, I like to be a little bit more, you know, intentional with the trades that I'm taking. And so I'm looking for other confirmations. So normally what I'll do is I'll turn this off when I'm doing my higher time frame analysis And then when we take some form of higher time frame liquidity or we trade into a higher time frame point of interest, like a higher time frame for value gap or order block, then I'll drop to the smaller time frames and look for inversion to justify my trade out of the higher time frame area. For example, okay, if we take a look at, what we had in terms of trading in this, Wednesday's instance, we actually traded live on Wednesday inside the Primeverse community, and we took a beautiful trade using this inverse fair value gap tool. So I'm going to break that trade down for you guys right now. And hopefully it gives you insight into future trades, how you could structure future trades around the indicator and all that good stuff, right? So for me, taking a look at gold, obviously we've been very bullish, right? The first thing that I'm always identifying when I'm jumping on the charts is number one, where is the money? And for me, Wednesday morning, seeing that we had this wick that was created at around 8 a.m. and was practically right on the money with this prior wick from Monday's trading in the Asian session, this is easy liquidity, right? Any buyers that are looking to buy gold probably have stop losses beneath these lows from the hourly time frame, hourly time frame perspective. So what I'll usually do is set an alert at those lows. Okay, obviously we're in the replay mode, so I can't do that. But I would set an alert at these lows so that I'm notified, hey, we're taking a key area of liquidity on the hourly time frame. Then I'll take a look at and observe price on the smaller time frame to see if there's any inversion. Because an inversion is going to be the earliest sign of a reversal, assuming that, in this case, we're seeing this is a retracement, right? We understand that this is a retracement on gold on the higher time frame perspective. We're going to create a higher low to then likely continue to create a higher high unless we were to see a full-on market structure shift. That's what we're anticipating with gold here. This is how I was thinking on Wednesday morning. And so where does it make sense for price to retrace to? Well, really one of two things. Number one, a liquidity capture. Number two, a point of interest. In this particular scenario, we had a hourly fair value gap in line with these relatively equal lows. The 50% of this hourly fair value gap was literally right beneath these two practically equal lows. And to the left, we also had this order block. All right, last down candle prior to an up move. So both of these were areas beneath the liquidity that I was anticipating price to trade to. But even if you don't have points of interest, you just have liquidity, you could wait for a liquidity capture and then, look for that inversion using the indicator on a smaller time frame. So the time that I'm doing sessions on Wednesdays is around 10 a.m. So this is where price was at on gold just before, we're doing live trading at 10 a.m. Keep in mind, this is the line where those two relatively equal lows are. Okay, right around 44.28. So as we're going into my session, we very quickly make a jab, and you'll see this a lot between 10 and 11 a.m. liquidity captures and then reversals on gold. It's just something you can study and you'll see for yourself quite often. But again, I'm not just looking to take a trade, because that's usually what happens. I'm looking for confirmation using the inverse fair value gap indicator. So we're seeing this run on liquidity on the 5-minute time frame. And I will personally execute my trades using the inverse fair value gap tool on the 1, 3, or 5-minute time frame. That's my preference. I'm using a higher time frame framework or context to then justify a smaller time frame entry using the indicator, waiting for those inversions to print. The 1 minute is always going to give you the first inversion, okay, because it's the smallest time frame. Obviously, you could go 15 seconds as well, and that's just absurd. I wouldn't recommend doing that. But the 1 minute typically is going to be the first time frame where you see an inversion, right? Because here, for example, this 1 minute candle that did the most damage as price continues to develop, right? Here's your fair value gap, okay? And a fair value gap is going to be highlighted by the indicator subtly. So if we zoom into price action here, you can see that it's identifying this fair value gap. This is the indicator doing it, not me drawing it. It's the indicator by default. The indicator is showing the previous setup that ended up being beautiful. We had an inversion back here. As soon as candle closed and gave the inversion, that's where your entry is from. Stop loss above the high. TP1 and 2 both got smacked. Beautiful sells on gold. But for me, again, I was looking for a higher time frame setup based on a higher time frame point of interest or liquidity capture. And obviously, we're bullish on the higher time frame. So I was favoring buys more than sells on Wednesday. You could have taken this trade, though, because the indicator gave it, right? But at a glance, as we continue to play out price, this is going into around, 10:20. The 1-minute time frame, you'll notice, gives an inversion right here. Okay, as soon as we get candle closure above this fair value gap, this is where your entry and exit parameters are going to be given to you with the indicator. So I know that the higher time frame, we just saw a capture of liquidity on the hourly time frame. Not only that, anybody that was trading New York session, this is the low of New York session, these are the highs of New York session from 8 a.m. to, current price. We're also seeing a run on all these, lows in the form of liquidity. So this is a pretty major run on liquidity. It's like a 200 pip move, sweeping out all these buyers. We then see price print an inversion. So the way you would be taking this trade, very simple. Entry is at the candle closure when the inversion is created. You want to ideally enter the trade within that next candle that's printing, whether, in this case, we're on the 1-minute time frame. During that next 1-minute candle, you want to look to find your entry. And ideally, it's, either at the entry line or lower. So you can see how we printed a wick lower. Sometimes we get a slightly better entry than what's given, but ideally you don't want to get an entry higher than that because your risk to reward is going to be slightly skewed. If it is a bit higher, it's not the end of the world, especially on something like the 1-minute time frame. However, on the 3-minute, you'll notice that we didn't actually get an inversion yet. So the 1-minute is always going to give you the inversion first, but it's not going to hold as much weight. And what I mean by that is my preference usually is to see a 1-minute time frame fair value gap inversion followed by a 3-minute time frame fair value gap inversion. That is going to hold more weight to me because it's a slightly higher time frame. It's still a very small time frame in the grand scheme of things, but it's going to be more valid, more probable that the market is actually going to reverse from this liquidity capture low to then run on the other side of liquidity. And this is a key point. My targets are, yes, going to be based off of what the indicator is giving me, but even more significantly, it's going to be based on where is the money on the other side of the market. Okay, we identified that this and the other low to the left, were significant areas on the hourly time frame. And I can also look at this and say that, hey, we have all these highs that sellers have stop losses above. As soon as I see an inversion, I can take a buy and easily target that liquidity on the buy side above these highs. So my take profit is going to be based off of risk to reward and what the indicator is giving me, but it's also ideally going to line up with liquidity. Does that make sense? Hopefully that makes sense. So here you have your 3-minute fair value gap. We haven't gotten inversion yet on the 3-minute. If I play that next candle, you'll see that we do get a candle closure above this fair value gap. You'll notice that the color changes as well. So this is going to be a bearish fair value gap until we see candle closure through it. There's your, inversion right here. It's going to flip. It's going to turn green. It's going to give you those entry and exit parameters. You got stop loss, take profit, all that good stuff. And again, next 3-minute candle, if we're looking at this on the 3-minute time frame, you want to ideally take your entry at the open or lower for the next candle to then target, these areas of liquidity, or just basing it off of TP1 and 2. So TP1 is always going to be hard set at a 1-to-1 risk to reward unless you change that in the settings. And then TP2 will always be at a 1-to-2 risk to reward, again, unless you change that in the settings. But notice how both of these TPs are right in line with an area of liquidity. You have this swing high here, and you have this here, which is right above all these highs. So it actually lines up pretty well with these areas of liquidity in this particular instance. The 1-minute time frame, we had lower take profits because you had a tighter risk to reward, or tighter entry and stop loss placement, I should say. And so the 1-minute will give you a better stop loss size, right? Stop loss in pips is going to be smaller, but it won't hold as much weight as the higher time frame. So I personally prefer to execute on the 3-minute after a 1-minute inversion. Sometimes I'll take the 1-minute inversion if it just makes sense. Again, it is a little bit situational. You have to use your discernment, but the bottom line is you wait for the inversion after trading into a relevant area on the higher time frame, whether that's a liquidity capture, an order block, or a fair value gap on the higher time frame. Okay, wait for an inversion in those areas to then target the other side of liquidity. It's very simple. Hopefully it's simple in the way I'm explaining it. But from here, Took this on my live session. For those of you guys that were on the session, a whole bunch of people ended up taking this trade. As price continues to develop, you'll notice that this is going to identify the most recent and most relevant in terms of it being recent inversion and give you new parameters as price goes on and continues to develop. So even though it's giving us sell parameters, right? Obviously, we're in the trade at this point already. It already hit TP1, and then our TP2 is above, at 44.56, above all these highs. Okay. As we continue to play out price, you'll notice that, indicator is doing its thing. It's doing what it's meant to do. We do end up going to smack that take profit to at 44.56, and we actually trade beyond that as well. So this is kind of just an example. I know it's, thumbnail sketch, tip of the iceberg, but this is how I would encourage anybody to use the indicator. Obviously, people are going to use it slightly different ways, and that's totally fine, right? It's an indicator. You're supposed to use it however you want to use it. But that's how I personally use it. And this is another example from just Asian session today. We had a good example of price trading into a higher time frame point of interest and then giving a nice reaction from that area, justifying your entry with an inversion. So taking a look at this on the 15-minute time frame. Okay. Hourly time frame we know is bullish on gold. This is current price action. We had this fair value gap on the 15-minute. All right. I'm looking at this in terms of the trading range. This is the low to the high of the trading range. Ideally, I want to buy below the 50% of the trading range, right, at a discount. And as price is trading into this area on the 15-minute time frame, you'll notice that the 15-minute time frame gave a really nice reaction here. But I'm setting an alert at the top of this fair value gap in this particular instance. No liquidity really being captured here on the 15-minute. So it's not like that other example where we were just looking for a run on liquidity and price to trade into a point of interest. Here it's just a point of interest that we're trading into. If I drop to, we'll go the 3-minute. Actually, we'll take a look at the 1-minute first. Okay, you'll notice that again, the 1-minute time frame gives the inversion sooner. Okay, this is an older one. You'll notice that this was an older one that actually ended up hitting stop loss. The 1-minute, you will find you hit stop loss more often than the higher time frames, like the 3-minute and the 5-minute, which is one of the reasons why I prefer the 3-minute a little bit more. But nonetheless, here we had an inversion trading down into the fair value gap. You can see it's still highlighted. This is that 15-minute fair value gap. Entry comes right after this candle prints. Okay. You'll notice that as we play this out, here's your fair value gap on the 1-minute. What do? We create an inversion right here. Entry parameters are now given, but a 50 pip stop loss, looking to target TP2, which we have liquidity in line with, which I like, clean liquidity here. We have TP1 is before this swing high, but right around this swing high in terms of liquidity. So again, nice to see how these risk reward ratios typically line up with liquidity to target. And if we go to the 3-minute, you'll notice that that entry is not there yet. This is the fair value gap that we would need to see an inversion from. As we play out price, you'll notice that we still haven't gotten it yet. Price retests this low. It's doing its thing. We then continue to consolidate, but ultimately we do end up getting the inversion right here. All right, entry, stop loss, TP1 right in line with this high, TP2 in line with these highs. Okay. Why am I justifying this trade, taking it on the smaller time frames from this higher time frame area? Well, it is a higher time frame fair value gap. So us seeing consolidation in this area is not alarming. You will notice that the higher time frames spend a little bit of time in their point of interest before we get a reaction from the point of interest. I'm just waiting for us to get a bit more evidence that there is going to be a reaction from that point of interest based on us getting an inversion on the 3-minute, 1-minute, 5-minute, whatever, looking for those inverse fair value gaps to then take trades. And instead of me having to swing this trade, I can be in and out of the market 1-to-2, 1-to-1 risk to reward pretty quickly, usually with these inversions. So to mark this out, we'll use the risk to reward ratio. Okay. Stop beneath this low in this particular instance. All right. Because again, we're only looking back 10 candles. This is 1, 2, 3, 4, 5, 6, 7 candles, 8, 9, 10. This is the low that makes sense to take it from, not that one, according to how the indicator is programmed. And then you can see targeting these highs right around that 1 to 2 risk to reward ratio, but 150 pip play. If we were to continue to play this out, this is an Asian session setup. We smack TP1, and then we go on to smack TP2 ever so slightly. I mean, this is a wicked TP2 initially. And then, since then we've gotten, retracement. And even the retracement, we came maybe a little bit shy of TP1, but there was an inversion here as well. So that's pretty much it for the indicator. That's how I use it. I would really appreciate each and every single one of you that decide to be, beta testers and use this inside the Prime Burst community, which is completely free. Anybody can access. Same with the indicator itself. Please leave your feedback, you know, for me. All right. If you go to the video description, there will be an area where you can leave your feedback, and I'll also pull up the website and kind of what it looks like for you to leave feedback, right? It's a quick 5-minute, feedback form. You go through here, first name, last name, so on and so forth. And you can give your feedback like, hey, I want to see this, I want to see that, whatever. Share your email. What's number third question is, what did you like about the indicator so far? Okay, save your improvements for the next question. And then the next question is, what can we improve on? How can we make it better? Right? What are some things that you would suggest? All right. And we're going to take a lot of these into consideration. Anything else you'd like to add, just generally speaking, super quick and easy. It would mean a lot to me if you guys could do that. And it's going to allow us to make even better versions of this indicator as time goes on. So I love it personally. It helps me a lot with my own trading. Like, I made this, I'm gonna be so real. I made this selfishly for myself. Like, because I didn't like to, manually draw on my screen, entry, SL, all that. I like to just have it done for me. It's more convenient, right? And it works. It's very simple. It's very effective. So that's why I made the indicator in the first place. But obviously, I'm happy to share it with you guys, and I would love to make it better. And now my mission is to make it better for every single person inside the Prime Burst community to have access to and just be an absolute savage on the charts and independently profitable. So with that being said, much love. See you all in another video. Looking forward to getting your feedback, being a beta tester. And until next time, peace out.